Hi, I'm PNC Joe, and I specialize in helping small business owners navigate the world of commercial insurance. As a business owner, your inventory, equipment, and furnishings represent essential investments in your success. Yet understanding how to protect these assets through business personal property coverage can be confusing and often overlooked. This issue becomes more complex when considering varying coverage needs, potential risks, and finding a policy that aligns with your unique business environment. Keep watching because in this video we will discuss these important topics. What is business personal property? What is the difference between business personal property and real property? Included coverages. What items are protected? How is the value of business personal property determined? What types of events are typically covered? Are there any specific exclusions I should be aware of? Coverage limits and deductibles. What do they mean? Understanding co-insurance clauses and a bonus topic at the end. Let's go through these points one at a time. Business personal property includes items that a business owns and uses in its daily operations. These items are movable, meaning they are not fixed to a particular location. Examples of business personal property are office furniture, computers, and inventory. It differs from real property, which refers to buildings or land that are immovable. Real property refers to land and anything attached to it, like buildings. Business personal property, on the other hand, includes items that can be moved, like office supplies and equipment. For example, a business's office building is real property, while the desks and computers inside it are considered business personal property. Business personal property insurance usually covers several types of items. These include furniture and fixtures like desks and chairs, machinery and equipment used for operations, inventory and stock for sale, office supplies like paper and pens, and leased personal property, which are items a business rents but does not own. The value of business personal property can be calculated using two methods: actual cash value and replacement cost. Actual cash value considers the item's age and wear, meaning you get money for what the item is worth today. Replacement cost gives you enough money to buy a new version of the item. For example, if a computer initially cost $1,000 but is now worth $500 due to age, actual cash value would give $500, while replacement cost would provide $1,000 for a new one. Business personal property insurance may cover events like fires, thefts, and some types of water damage, depending on the specific terms of your policy. For instance, if a fire damages your office equipment, insurance might help cover the costs to repair or replace them. However, certain events like floods or earthquakes may not be covered unless you have special insurance for those. Yes, business personal property insurance often has exclusions, which are events or items it does not cover. Common exclusions include damages from floods, earthquakes, or intentional acts like vandalism by the owner. Always check your policy to understand what is excluded so you can consider additional coverage if needed. Coverage limits are the maximum amount an insurance company will pay for a claim. Deductibles are the amount you must pay out of pocket before insurance kicks in. For example, if your coverage limit is $50,000 and a flood causes $60,000 in damages, the insurer will only pay up to $50,000. If your deductible is $1,000, you pay the first $1,000 of any claim. A co-insurance clause requires a business to insure its property to a certain percentage of its value. If you don't meet this requirement, you might have to pay a larger share of any loss. For example, if your business is valued at $100,000 and your policy requires 80% co-insurance, you should have $80,000 in coverage. If a loss occurs and you're underinsured, you might get less money from your claim. Business interruption coverage is designed to help replace lost income if your business cannot operate due to a covered event, like a fire. For example, if your store is closed for repairs after a fire, this coverage may help pay for lost income during that time. It can also cover ongoing expenses like rent and employee salaries, depending on the terms of your policy. To help ensure your coverage is adequate, regularly review your insurance policy and update it as your business grows or changes. Consider consulting with an insurance agent to assess your risks and determine appropriate coverage levels. Make sure to include all valuable items and consider potential risks specific to your location, like flood or earthquake hazards. Remember, adequacy depends on individual circumstances and policy terms. Understanding business personal property coverage is an essential step in safeguarding the investments that keep your business thriving. By familiarizing yourself with the nuances of different coverages, exclusions, and valuation methods, you can tailor a policy that best fits your unique business environment. Remember, regular reviews and adjustments to your policy ensure it continues to meet your evolving needs. Here's to protecting your business and empowering your journey to success. If you have any questions or ideas for future videos, please let me know in the comments below.